Hi, everybody. My name is Aaron Young. I'm Chairman, CEO of Laughlin Associates, and I'm really grateful that you have chosen to spend a little time with me today talking about the secrets of using a corporation or an LLC. We're going to cover a lot of ground today, so I hope you've got paper and something to write with, pencil or pen, whatever you prefer. And we will be going through this information. The goal here is to give you the framework that most small business owners, even if you're successful, most people don't understand all the things that we're going to cover today, and not knowing can really hurt you. So I'm going to give you a fairly comprehensive overview over the next 30 minutes. And if you have questions about things or want to learn more, make sure you're writing those things down so you don't lose them as we go through this material. Again, my name is Aaron Young. I bought Laughlin about 20 years ago, and we have been for 50 years sort of one of the leading incorporators in the industry. We sort of invented the Nevada incorporation industry, if you've ever heard about that. But in the 20 years that my partner Lee and I have owned the company, we went from being a Nevada incorporation service to all 50 states. So if you want to form a corporation or an LLC in any of the 50 states, we can help you with that. We work with board compliance, which almost no privately held companies focus on their board of directors and the rules associated with that so that your corporation or LLC will actually protect you. We are asset protection strategists. We teach about wealth creation and protection, tax assessments, trademarks, trusts, education. We do all these things, and we've been doing it for 50 years, tens and tens and tens of thousands of clients, hundreds and hundreds of thousands of clients over that 50 years, many of whom are still with us today. I actually started my first business clear back in 1983 and have been making payroll for people ever since then. So I've learned some things. Laughlin was a company that we were already competing with, and when their owner passed away, the trust lawyer for the family, the Laughlin family, called, asked if we were interested in buying the company. We did, and we've expanded the company quite a bit since then and continue to do that growth. I'm glad you're here. The benefits for you if you're just getting started, or even if you've been in business for many years, because as I said, most closely held companies, 1 or 2 owner companies, don't know a lot of the things we're going to cover here today. And a lot of people have formed a corporation or LLC or several corporations or LLCs, and they know they have it, but they're not exactly sure what to do with it, how to use it, how to get the most bang for their buck. That's what I want to cover with you today. When we go into business, it's usually not because we want to be small and struggling and having a difficult time. It's because we want to do some really big, cool things. This is a friend of mine. His name is Les Brown, and maybe you've heard him speak before or heard some of his talks or read his books. Les is a great guy, and he often says the following. He said, it isn't that people aim too high and miss, it's the aim too low and hit. And I think most of us as entrepreneurs want to hit that big goal. We want to become wealthy. We want to have control of our time, our money, our travel, our health. We want to be able to do things to help our families. And yet so many entrepreneurs struggle away and don't really get even close to that big goal that they had when they got started. And it wasn't because they didn't have a desire that they wanted to fulfill. It's that they limited themselves in what they would believe was possible. And here's what I'm here to tell you, is that the big dreams are yours, but there's got to be the right foundation under the dream in order to get to it, right? And I'm going to teach you what those things are today so that you have the framework for it. So here's what we're going to cover here in the next 30 minutes or so. What is the proper foundation for your business? Ooh, excuse me. What's your proper foundation for your business? How do you reduce your tax burden so that you have more money to either put into growing the company or to put into your pocket? How do you reduce your risk while increasing your ability to grow and scale? What are the big mistakes that almost all business owners make? I'd say over 95% of business owners make a few common mistakes. And once you figure out how to avoid those, it dramatically improves your security level, reduces the risks, gives you an ability to go leverage what you're doing out there in the marketplace and do it safely. And how do you dramatically increase your scale and thus your wealth? How do you do it? And I'll tell you what, the reason almost nobody that goes into business does very well, only 4% of companies ever break $1 million a year in revenue. And yet we hear about these multi-billion-dollar companies all the time. And we wonder, well, wait a minute, what are they doing that I'm not doing? Well, there is a proven system. When you do step 1, step 2, step 3, step 4, when you follow the recipe, you will get the result you want. The problem is most people are out there kind of making their best guess day to day, groping around, trying to figure out what to do. And because they don't know the proper steps to follow, they struggle. And you'll even find people that may have knocked it out of the ballpark one time can never go back and do it again. Why? Because they don't really know why they were successful in the first place. Then you see other people who may go through some kind of a horrible thing. You know, maybe the real estate industry flips on its head back in 2008 and they lose everything, but then they rebuild it right away. That company, something happens in an industry, the company collapses, but they rebuild right away. And you kind of look at those people and go, man, they always land on their feet. They always come back. You know why? Because they know the steps to build something that can grow again. It wasn't a fluke. They actually know why things work, and they know how to put pieces back together again so that they get back to a level of success quickly. Some people may have become a millionaire. They made $1 million. Something happened. They lost it. Then they come back at 5 million or 10 million or 20 million. Why? Because they know why things work the way they do. And I want to cover some of that even today. So let's get on with the lesson. This is a buddy of mine named Jeff Hoffman. And he had this really great quote. He was given a talk to our inner circle group, our mastermind group. And he said, there's a really good tool that you can use to design your future. It's called entrepreneurism. This is a guy who built Priceline, who built Expedia, who created those kiosks at the airport that print out your boarding pass. He's a Grammy award-winning jazz album producer. He did a movie for $4 million. He invested in, and it did over 120 million in sales. This is a guy who's figured out how to be successful in many different circumstances, and he uses entrepreneurism to do it. And I'm glad to count him as a friend. But let's talk about how to make your entrepreneurism successful. And it always begins with the same thing. You want to begin with the end in mind. So when we start our journey and we don't know where we're going, we end up wandering around a lot. Whereas if we use Google Maps or Waze or something that pinpoints, here's where you are and here's where you want to go, what's the best route from here to there? If you begin with the specific end in mind, you will avoid a lot of wandering, lost, aimlessly blindfolded in the woods. So here's what we're going to talk about today to build your success: your foundation, tax planning, asset protection, funding your company, and that recipe, that strategy. It's not even a strategy, it's a formula that gets you from where you want to go to where you want to be in the fastest way possible. So let's talk about those things. Start off with foundation. So many of you formed some sort of business entity or didn't form a business entity. What I mean by an entity is a corporation or an LLC. Maybe you're doing business just as a DBA. It's just you, but you've adopted a name. Instead of being Aaron Young, who is a plumber, I call it Young's Plumbing Service. That's not a corporation, it's not an LLC, but it's just a name. DBAs are used when you're going to conduct business under a different name than your own. They don't provide any liability protection. They don't give you any special tax advantages, but they do give you a marketing advantage. You can use a different name. People who are doing business as are typically a sole proprietor. So a sole proprietor is not a legal entity, not a corporation or LLC. It's just you engaging with the public. Some people think sole proprietor means one person, and that is incorrect. You could have 100 employees and still be a sole proprietor. Okay. What it means is it's just the business is you and you are the business. There is no legal separation. Okay. So while you can certainly go do business that way, you don't get any of the lawsuit protection or the tax benefits that a corporation or LLC might. So a sole proprietor, Aaron Young, the plumber, or a DBA, Aaron Young, the plumber, doing business as Young's Plumbing Services, are fine. You can do it, but you get no safety, no protection, none of the things the government wants to give you to help you. You don't get any of that as a sole proprietor. You do as a legal entity. So let's talk about what the three most common legal entities are. C corporation. Basically, all public companies are C corporations. C corporations are totally separate from you. They're utterly their own thing. So they are something you can use as you want to grow, bring in investor money. They add some credibility because bigger companies are typically C corp. You can bring in investor money and you can do things like employee stock option programs or other employee benefits that may not be available to sole proprietors. Most of us are not trying to go out and get investor money. We're not trying to go public. We're not trying to create an ESOP or anything like that. What are we trying to do? We just want to do business. We want to get the tax deductions and we want some asset protection. So if you're a one owner company or it's you and your spouse, a lot of times you'll use an S corporation. Or if it's you and some other people that are not your spouse, and I can go into more detail, write that down if that creates some question marks. But if it's you and your adult child, you and a friend, you and some other people who have unique skills, and you're going to come together and you're all going to work together. It's not passive investor money. It's somebody great at sales, somebody great at technology, somebody great at research and development, somebody great at manufacturing, and you're coming together. Then you may want to use an LLC because limited liability companies gives you a ton of flexibility of who gets what based on their paid in capital. Corporation says shares are valued here, whatever paid in capital you put in or whatever value you bring, you get a certain number of shares. LLCs give you more flexibility. LLCs give you a variety of ways of being taxed. LLCs limit the loss that any member of the LLC can experience to just whatever is theirs. So in other words, if there are three of us and we're an LLC and we have some catastrophic lawsuit against me, just against me, like I rear-ended somebody and hurt them and they sue me, the other members, my partners in the LLC can't lose their stuff and they don't end up with a new partner. I can't lose my membership. I can lose any sort of distribution that was going to go to me, but it doesn't end up hurting my partners and I can't lose it. In other words, my partners don't end up with a new partner. If I go through a divorce, my spouse my ex-spouse could get my distributions, but they don't come in as the new member or their new spouse doesn't come in as the new member. So you've got some protections around LLCs, which are pretty cool. And then there's a question all the time, like, okay, so if I set up a corporation or LLC, where should I be incorporated? Should I be in Nevada? Should I be in Wyoming? Should I be in Delaware? Typically where you should be is wherever the business activity is. So you could live, like in my case, I live in the state of Washington, but most of my business activity is set up in Nevada. So the entity is in Nevada. If I set up a company I live in Washington, but I'm doing a lot of business in Oregon, my company's really in Oregon, I should probably be set up in Oregon, where the laws and the tax regime around that business fits where the business is happening. Make sense? If you're a real estate investor, there may be some nuance to this, depending on where you own a bunch of properties or where you have your property management being managed or whatever. These are some more specific details we get into at a later date or in a one-on-one conversation. But just know, typically, you form that corporation or limited liability company in the state where the vast majority of the business activity is taking place. Then when it comes to choosing the entity, you want to ask yourself, well, how do I set up the company? Who controls it? What are the tax consequences? Where's the money coming from? How do I exit this thing? These are all important questions. When you're beginning with the end in mind, you want to ask yourself those questions. How is all this stuff going to work? Then when you get ready to do it, to form that entity, then you have to go through all the steps. And almost everybody that I meet has done it wrong. Almost everybody who's either gone to an online incorporation service or gone directly to the Secretaries of State website and done the quick down and dirty filing for an entity in their state misses a whole bunch of steps. So what are the steps? Well, first you select the state. Then you select a name. And based on restrictions in different states, they may limit how you use the name fund or bank or partners or group. There's a number of things that could be limited and restricted based on the state where you're doing the filing. So first you pick the state, then you pick your name, then you ask for the name with the state. And if they come back and say, yes, you can have it, okay, move on. Then you have to pick a resident agent. All 50 states require a resident agent. They either call it a resident agent or a registered agent. All 50 states require it. It is the place where the sheriff can bring the lawsuit if there's a lawsuit. And so it's supposed to be open 8 to 5 Monday through Friday. Most small business owners pick themselves to be the resident agent, which is not a problem as long as you're going to be available to receive a lawsuit 8 to 5 Monday through Friday. And assuming that you don't mind that the sheriff or the service processor is going to come to your home or into your retail shop or into your office building. If you don't care that you're going to come be served with a lawsuit at some point by that sheriff or by the service processor, and that it will be open 8 to 5, you can be your own resident agent. Now, resident agent or RA service is so cheap that most bigger companies choose to not be, or successful companies choose to not be their own resident agent because they don't want somebody showing up at their home, showing up at their shop, showing up in their office building for the $150 a year or whatever it is to use a professional resident agent. They just pay somebody else to deal with that and keep the sheriff out of their place of business. So whatever you choose, you are required to choose a resident agent. It's either going to be a professional like us or like any number of others, or they're going to do it themselves. Then, if you've gone to the Secretary of State's website, you will apply and you will get back a little short, usually just a couple of pages of documents that say you have appropriately set up the company in that state and you've paid your fee to the state for the privilege of being incorporated there. And then they give you a simple little thing called the Articles of Incorporation that says, yes, you've done this first part. But then there's all the other stuff that makes you a legitimate entity that almost nobody has. So you have to draft and file the legal documents for the state, including things like your operating agreement in a corporate or in an LLC or your bylaws in a corporation. So if you don't have an operating agreement or you don't have bylaws, you're not properly set up. That's what we're talking about, draft and file the legal formation documents, and then the governing documents. And then you need to have a board of directors. Well, actually, you have to have a shareholder meeting where you elect the board of directors. And then the board of directors has to have an organizational meeting where they then issue either shares or membership certificates. You fill those things out. They go into a log that says who owns what, and then you issue those things. And then you have to have ongoing board meetings. Anytime you make you discuss or want to make any of hundreds of choices. Everything from should we sign a lease on the building, open a bank account, change CPAs, put money in petty cash. All of those things require a board meeting, minutes, and resolutions. So those things need to be done if you want to be set up properly and get all the asset protection and tax benefits that you think you want in filing a corporation or LLC. But when you don't do it, then what you think is protecting you, what you think is making your tax deductions legitimate, goes out the window. You've got to do it. Now, these ongoing corporate formalities, ongoing regular, like monthly board meetings, minutes of those meetings, and properly drafted resolutions are the things that show that you are treating that business entity as something separate from you. As the owner of a corporation, whether it's an S Corp or a C Corp or an LLC, you're required by law in all 50 states to keep minutes, hold meetings, keep minutes, pass resolutions, and issue stock. Almost nobody does. Over 95% of the companies that I've run into over the years, and we have tens of thousands of them, haven't been doing it. They need to have them done. They don't even know how to do them. They don't know how to hold a proper meeting, how to keep minutes of that meeting, how to write resolutions, which are basically a permission slip from the board of directors to the CEO or president, or in an LLC, a manager, to go do something. The decisions are made at the board level, and then the board gives permission to the president or the manager to do the work. Now, in a closely held company, you probably go, well, I'm the shareholder, I'm the member, I'm the board, I'm the president or manager. Why would I have to have a meeting with myself? That's insane. You got to be out of your mind. Okay, but it's the law, and the law says you must do it. And so you can make a choice to ignore it. I tell people all the time, look, you can drive 100 miles an hour through the school zone, and you're probably going to be fine until the day that you get caught. And on that day, it's going to be a bad day. It's going to pull the rug out from under you. And in your corporation or LLC, the thing that's super scary is that by ignoring this stuff because you don't exactly know what to do, when you ignore it or go, does that really apply to me? Or we're just a small business, or we just got started, or I'm a good person, I don't do anything wrong. By ignoring going through the corporate formalities, you are risking everything you are building inside that business entity. So ignoring it is not an excuse. And if you do ignore it, or if you just are oblivious to it and you don't do it, and that you ever get sued or audited or want to go get a loan, want to go get investor money, even want to go through the bankruptcy court and not lose all your personal stuff as your company fails, if you haven't done those things, the liability protection and the tax deductions that you are taking or want to take are taken away from you. If you get audited and you haven't done this stuff, and you've been taking tax deductions for the last 3 to 5 years, with the time they're auditing, they're going to take most of those deductions back and say, you were not a corporation, you were not an LLC, you were actually acting like a sole proprietor. And you don't want that. That's a bad day, folks. Albert Einstein said, the hardest thing in the world to understand is the income tax. So we want to get a grasp on it. We know that almost all business owners are overpaying taxes. The IRS says that almost all business owners are overpaying taxes because they don't know the deductions they can take. I want to tell you, even if you're just getting started, but certainly if you're growing your company, the IRS, who also wants you to give them money, they'll also let you take deductions because they know how important business entrepreneurship, the backbone of America, is small business. is companies under 50 employees. That does almost, it's 86% of GDP, and 83.6% of new hires are from companies of 50 employees or less. So do you think you're important to the government? Yes. Do you think the IRS is set up to both collect taxes, but also let you take deductions and give you benefits? Yes. It's all stacked in the favor of the properly formed corporation or LLC. They need you to be successful. The system is in place for you to be successful if you will just learn the system. So here's some things that you can deduct. Costs of setting up your business, up to $5,000 can be deducted. Organizational costs of forming the LLC, corporation, holding board minutes of up to $5,000 a year. Average home office deduction, $1,500 a month. A month you can deduct, and some people more. Renting your home, it's called the Augusta rule. Renting your beach house or your mountain house or your ski house, you know, your secondary home, your company can rent the company or rent that property 14 days, 2 weeks, a year, pay you going costs. On average, you can take $4,200 using this Augusta rule, $4,200 a year, tax-free. Your company can write it off and you can receive it tax-free. Check it out. $5,000 to get set up, $5,000 to keep running your company, $1,500 a month for home office deduction, $4,200 a year if you have another location, a vacation home or second home. Your company can rent it for 14 days, not 15, 14 days at a going market rate, which averages $4,200 a year in tax-free money in your pocket. On average, people are not deducting nearly as much as the IRS says you can for vehicles, equipment, and software. On average, $65,000. Look at section 179 of the code. Up to $65,000 can be deducted per year by your company for stuff you need, including the vehicle you're driving, right? There's more than just mileage deduction or the standard deduction that you can take. Also, up to $12,000 a year in medical reimbursement. That's pretty cool. These are big things you can do to put money in your pocket to enhance your lifestyle by just knowing the rules. So you have to ask yourself, how is your business taxed? Well, if you're a sole proprietor, you're in the worst case. You're paying 15.3% self-employment tax on top of all the other state and federal taxes. You're in the highest tax rate and the highest audit rate. Now, you might be small, so you might be going, well, the dollars I'm spending are not that big, but you're paying the highest possible rate that you can. If you're a sole prop, you're paying the highest percentage, and you're also the most likely to get audited. So C Corps, the least likely to be audited. They're completely separate. They're a complete separate paper person. They have their own tax refund that they do, and that's it. Okay. They can make dividends, or they can issue dividends. They can issue disbursements to the shareholders, but they're their own thing. A C Corp, think of a public company, is its own thing. For smaller companies that are one owner or spouse, you and your spouse own it together, then a lot of times we'll go to an S corporation. An S corporation is great because usually if it's you or you and your spouse, you have multiple streams of income. Maybe there's a W-2 job. Maybe there's some money from some multi-level marketing company you were involved in. Maybe you have like I have a hobby farm, right? And we buy and sell horses. So there's money there. There's a bunch of different things. Well, so this business you have over here, the gains or losses flow through to your personal tax return, along with whatever other gains or losses you may be receiving. And it all kind of gets aggregated together on your Schedule C. And you get to put all the gains and all the losses together to give you your taxable amount. That's how an S Corp works. And that's how a one-member LLC works too. But if you have two members, and remember, you and your spouse are considered one member of an LLC. But if you and your adult child, your friend, your business partner are in an LLC, then there are actually 4 different ways to be taxed. All right, as a disregarded entity, as a partnership, as an S Corp, or as a C Corp. Super cool. All of a sudden you get to pick the best way to be taxed, all because you know that there are 4 ways, you're properly organized to do it, you're doing all your corporate formalities, and now you get to choose the best vehicle, the best methodology is a better way to say it, to get the best tax treatment for your specific business. LLCs are phenomenal under the right circumstances. I love LLCs under the right circumstances. So if you've got questions about LLCs, write that down and let's go into them. But here's what we say. Owning a company, especially even if it's not making a real legit profit yet, but it's still got cash flow and you're doing things, it's like getting a huge pay raise compared to being a sole proprietor or just a W-2 income earner. The tax benefits of owning a business are huge. This is a small example, tiny example. There could be hundreds and hundreds, maybe thousands of things that you can benefit from and enhance your life by properly owning a corporation or LLC, but you must follow those rules. As a business owner, you're sitting on thousands of dollars of deductions as long as you know the rules. If you have some idea of the code, if you can ask good questions, if you've got a good tax expert that you're working with, almost everybody's overpaying because they don't know the rules, or maybe because they're afraid, and they have good reason to be afraid if they don't know how to build that corporate armor around them, the corporate veil, which is what is your benefit from doing your corporate formalities. These are critically important. Now, what about other funding? How do you bring money into the business? How you fund your business is gonna be one of the most critical things that you can learn. I'll tell you, people say, why do businesses fail? And here's what I tell them. 1, they had a bad idea. Nobody wanted to buy their thing. 2, they didn't have enough money. They didn't have the funding they needed, either from their own savings or from outside sources, but they didn't have the runway to survive long enough to get their good idea to market. So why do they fail? Either the idea is not good, or they don't have enough money, or they don't have a plan. They don't know what they're doing. They don't know the recipe. The money is critically important. And there's money available to you when you know where to look for it. So many people during the COVID, the stimulus programs, they were not able to participate because they weren't set up properly as a corporation or LLC to take advantage of the payroll protection loans or the EIDL loans, or to know how to work with the bank to get corporate involvement rather than personal involvement. They didn't understand how to leverage the assets that they already controlled. There are so many ways of taking money out besides distributions or W-2, but they don't even understand what those things are. They haven't learned how they can use multiple entities to defer having to pay that tax and keep the money under their control for longer, or how to set up a retirement plan that not only will benefit you in retirement, but benefits you today. These are all things that when you learn the rules around corporations and LLCs are yours to enjoy, yours to benefit from, yours to leverage, your fuel to scale your business. These are all there. It's not hard even to get it, but you don't get it unless you know the rules. Then if you are successful in growing and scaling and building wealth, then you have to protect it, because making money is only as good as your ability to hold on to that money. And being in business is a risky proposition. The more successful you get, the more people go, maybe I could redistribute some of that person's assets from them to me, because they seem to have a lot and I don't feel like I have a lot. And I wonder if there's a way for me to get it. Years ago, maybe 15 years ago now, the government did a study where they were asking the question, what do Americans believe is their best route to gaining wealth? And you know what the 3 top answers were of how you can become wealthy? Inherit the money, win a lawsuit, win the lottery. Actually, it was in the opposite order. Win the lottery, win a lawsuit, inherit the money. Not figure out an idea, grow a successful business, make smart choices, and become successful. No, it was win the lottery, win a lawsuit, inherit the money. People want to redistribute money that they didn't earn. They want to figure out a way to get something they didn't earn and bring it to themselves. Entrepreneurs, the more successful you are, the more people want to get into your pocket. And so that can be something that scares you, or it can be just simply something that you deal with up front and you understand it's true, and you just make sure that you're doing things so that you're safe and protected. The key to asset protection is separating stuff, not keeping everything in one bucket. What do they used to say? We don't keep our eggs all in one basket, because if you drop the basket, you'll lose all the eggs. So the key to wealth preservation is separation. Keep some rental property over here, and keep your operating business over here. And here's your primary residence. And here's maybe your stock accounts or other investment, antiques, art, coin collection, intellectual property that you've done. You keep these things separate. You use separate entities to keep them in different baskets, so you don't lose everything if you drop the basket, if you have a problem. That's the key to separation. And it's important to understand how to figure out how to do that. If you have questions about that, or when is the time to start moving things into the second, third, fourth basket, write that down. Write that down. So I guess the bumper sticker is you need to treat your business like a real business, not like a hobby. So separating assets, maintaining the proper records, meeting all the legal requirements of both the federal government and your state, and maybe your city and your county, depending on where you live. You may have other tax programs specific to your town or to your county. So we want to know all those things. We want to know the rules and follow them so that we're treating our business like a real business and not like a hobby. Okay? And doing it can get confusing, which is why we need to have a strategy where you understand, where am I going? What's my big vision? When you get started, like, what is it that I'm doing this for? What is it I'm trying to strive for? What's the outcome? How will I know what the finish line is? I need to define what that looks like. I need to set that target, and then I need to take baby steps on the specific path, not deviating from the path by little distractions, little squirrel. We don't want to do that. What we want to do is say, I know there's lots of input. A lot of people want my attention. A lot of people want to offer me the deal of the century, but I'm going to stay on this path because I know where I'm going. I have the vision. I've identified the target. I'm going to grow toward that. I'm going to build a long-term plan that gives me the steps, and then I'm going to put together the several resources, human resources, financial resources, intellectual property, social capital, bring those together so that I can actually get to the outcome I want. And folks, this information I'm giving you is just the beginning. This is the start. You need to become aware of these things so that you can actually flesh out that real legitimate business. And there's so much nuance to it. But here's the cool thing. And this is a quote from yours truly. When you know the secrets, you can build a business. Let me promise you this. When you know how to do it, when you understand the rules, you can build a business that works harder for you than you have to work for it. Let me say it again. You can build a business that will work harder for you than you have to work for the business. I've been doing this my whole career, building a business, working my butt off, then figuring out how to extricate myself from it by building a team, and then they do it. Now, all of a sudden I'm here, the business is operating, I can put my focus here, 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 and just build one thing after another. Going businesses, investments, boards of directors, rental properties, and other investments, and so on. And you can build real wealth. Once you learn the formula to do it, you can build a business that will work harder for you than you will work for it. And that is a powerful, powerful time. So I want to offer you an opportunity. I've covered a lot of information today. I've given you a lot of good information. We've put together a 4-part masterclass that goes deep into the things that we've talked about today. So if you've written down notes and said, okay, I need to learn more about that, and about that, and about that, and about that, there's a way. For $97, we're going to go into this 4-part deep dive masterclass. This is the sale. There is no upsell beyond this unless you want to do some of those things as your company starts to grow. But we're going to give you the step-by-step stuff you need to understand about your corporate formalities, understand about your entities, understand about the recipe, the formula to follow, understand. We're going to even show you how to find I think it's $60,000 worth of tax deductions. Let me go through and show you what this is. I teach 3 of the 4 modules, and then our main tax advisor teaches 1 of them. We're going to teach you how to build on the right foundation, reduce your taxes, secure your assets, fund your growth of your business, plan the exit so that you can live a life that you've dreamed of. It's why you did it. You can go to secretsclass.com and you can enroll. Module 1, we go deep, deep, deep on C Corp, S Corp, LLC, and sole proprietor too, but really, you could be a sole proprietor, but it's not going to get you very far. When you really understand C Corp, S Corp, and LLC, those become tools. Those are not, they're unique. They're different. They're not choose one, they're choose the right one, right? Think about knife and fork and spoon. Well, you can eat ice cream with a knife or a fork, but it's probably easier to eat it with a spoon. Or soup. You can eat soup with a knife a little bit at a time, but it's way easier with a spoon, right? But if you try to cut something with a spoon, very difficult. You want the right tool for the job, and we go through that heavily in Module 1. Module 2 is how to take those entities and start using them like chess pieces to create asset protection. And then we also talk some about trusts and other things that give you the tools you need so that things you're building can't get taken away from you, okay? And number 3, when we have our tax expert come in, we talk about all these different deductions and all the ways, all the rules that you need to follow so that you get to take all the deductions that you no longer are overpaying. And truthfully, I've had people go through this part. We talk about the taxes that you can, the deductions you can take, understanding the code, and also how to do a tax assessment. And we've had people get tens of thousands. I think the biggest one I can think of off the top of my head is we had one client that went through this who got over $250,000 back in tax returns from the last 3 years, simply by learning what was taught in this one module, okay? And then number 4 is where I start to go into that recipe, that formula that I've used dozens of times to build multi-million-dollar companies, public and private, and not be a slave to the company. So on module number 4, I'm going to give you the overview of that. I can't give you everything, but I'm going to tell you what, I'm going to give you plenty to go out and evaluate where you are now and things to start doing now to be able to build a real business that is one that works for you and that you're not the most critical employee. These 4 modules, the foundation, how to do asset protection, how to reduce taxes, and how to follow a formula of success will utterly change your life if you will just take advantage of the things that apply to you. Whether it's everything or one thing, it will change your life. It's $97. So we're also going to throw in some other videos for you that we've built over time. Building business credit, building high performance teams, how to find outside funds to grow your company, how to run a day-to-day business smoothly, how to really make that conversion from a hobby to a legitimate business if you're kind of doing a side hustle, how to turn that into a real business, and how to use multiple entities in multiple states to get greater asset protection and tax savings. So you're going to get all 6 of those videos as well as the 4 modules. And we're also going to give you our normal $3.99 business snapshot, where we look at what do you have now, what ingredients are on the countertop, and how do we organize those things so that you get the most value for the things that you already have. If you go to my website, laughlinusa.com, you will find that you can buy this every day for $3.99. We're going to include it along with all these the 4 modules and the 6 bonus trainings under this $97 masterclass. You're going to get that. And you're also going to get something that I teach every month called the Freedom Call. A couple times a month, I come on and I tell you what I've been hearing in board meetings, what I'm seeing with my friends who are running very large companies, what we're doing in the public and private markets, what's going on with money, real estate, the markets, and so on. We also do hot seats. We do all kinds of cool things in the Freedom Call, and we're going to give you a 6-month membership. You can experience that and see if that's something that will benefit you in an ongoing way. So In conclusion, the masterclass is for you. If you've already formed a corporation or LLC, but you're not sure if you did it completely, it's not necessarily done right, or you've just started out and you don't want to make big mistakes, you want to have a plan, you're already in business, but your business isn't growing the way you wanted it to, you feel kind of like stuck in the mud a little bit, we want to speed that up. You want to know how to find tens of thousands of dollars in tax deductions, how to quit overpaying, and how to maybe even get money back. You want to protect everything you've already built, all the things, you've got your assets over here. Now you're doing this. How do we protect all of this stuff as well as the business? We want to make sure you know that. You're working hard, but you don't know how to really scale. I'm going to teach you how to do that. And really when it comes down to, we all got into this because we had a bigger dream for our life. And if you really want to start to build a business that can be the fuel for the life you've dreamed of, I'm not kidding, folks. I'm not kidding, folks. If you don't know me, and most of you don't, let me just tell you this. I've been married for 34 years. I've been an entrepreneur all of that time, save 3 years when I stepped in to be a vice president of sales for a multinational publicly traded company. Okay, offices all over, 350 offices around the world. I came in as one of the 3 vice presidents to run sales for that. Other than that, I've been making a payroll since 1983. Okay, I've been married 34 years, happily married, raised a great family. We have multiple homes, including the farm that we live on where I raise horses. We travel all over the world. We hang out with cool people. We can do the things we want to help our parents, our children, our friends, the charities that matter. You can have all of it. You can have all of it as long as you just learn how to do it. And that's what I'm trying to teach you with this master class. It's hard to come to every event. It's hard to go talk to the lawyer, then go talk to the CPA, then talk to the financial person, then talk to the bank, and you get different stories. The goal is to bring all of this into sharp focus in one spot. That's what I want to do. So if you want to do it, if you want that outcome, if you want that life, it's $97. You'll get the 4-part masterclass. You're going to get the 6 bonus modules of the trainings I mentioned. You're going to get the live Q&A call that we do every week for business owners. It's kind of like office hours. Come on in and do it. You're going to get 6 months of the Freedom Call. You're going to get a one-on-one live consultation to talk about the free snapshot that's normally $400, $399, that we sell every single day to people who just come to the website. You're going to get all of it because I know that if you go through those pieces, if we help you get those pieces in place, odds are you're going to become a Laughlin client and you're going to be a client for many, many years to come. And even if you never become a client, if you become a successful business owner in your country, and my country is the United States of America, if you become successful here, your success, my success, everybody else that learns this stuff, that raises the tide, and that rising tide raises all ships. And that's good. That's a good thing. So join us today. It's $97. Go to secretsclass.com, secretsclass.com, sign up for the masterclass. You'll get the videos right away. We'll start shooting you everything that you need to start changing your life, changing your business, changing the outcomes to something much bigger. Remember, it's not that we aim too high and miss. It's that we aim too low and hit. Quit settling for this. Let's shoot for that. If you shoot for the stars and only hit the moon, that's way better than being down in the dirt, right? Come join the secretsclass.com. It's $97. If you don't like it, we'll give you your money back. But here's what I know. You're going to love it. You're going to be better armed for success, and you're going to engage in the world, in your business, in every way, in a more powerful way. And that is my promise. And with that, I say thank you so much for being here. If you have questions, comments, make sure you write it in the Q&A section, not the chat. If you want to quickly write in here, write me, or I need to talk to somebody or anything, go to Q&A. I'm going to leave this up for about 5 more minutes. Go to the Q&A, put in whatever you want to put in, and we'll come back and we'll talk directly with you. Okay, that's the end, guys. Thank you so much for being here. I look forward to seeing you again very soon. Thanks.